So KYC process in general, KYC means know your customer, and it is a process set up by financial institutions, but it is now reached in other industries as well, as you may have noticed over the past years into other companies such as cryptocurrency companies, but also insurance companies, pension companies, other types of companies, where this process is very important. What does it mean? Know your customer is basically the goals are that you know your customer who you're dealing with before entering into a business relationship. So as an example, if you have a individual, he wants to open a bank account, he goes to a bank. Well, the bank needs to know who this person is and where his income comes from and where does he live, etc. So to verify who this person is, there are a couple of steps. I will briefly mention that, but that's the most important thing, to know who you're dealing with before entering into a business relationship. And the other goal, obviously, for financial institutions and for other institutions, is to prevent bad actors or criminals to enter and to misuse their business platform. So the know your customer process, where it's important to perform steps to know your customer, it basically has a gather and requesting customer information. So if you have an individual, you want to know who this person is, you will ask their ID passport and to verify that ID passport so that you know that indeed this individual is indeed the person that he's saying. So if I come, I say, yeah, my name is Fahad Hassan, I want to open a bank account. The bank will ask me, okay, can you provide a ID card, a passport where we can verify that you are indeed Fahad Hassan. So that's one part of it. Also, if you're dealing with a business or a corporate as a customer, so a company as a customer, you need to know where they are registered, what type of business they do, who is the ultimate beneficial owner, so who owns the company ultimately, and what type of risks are there in their business. So those type of information, you will reach out to the customer. That's the process or the step, as I mentioned, step one, gather and requesting customer information. Well, when you receive the information, you have to assess it. You have to see whether you can verify the information, whether you see any risks attached to the information. Those risks are based on a couple of factors. So if you're dealing with let's say a company as a customer, you would like to know in which jurisdiction they are located. Because as you know, as you have in the news seen, that we have now the situation between Ukraine and Russia. So let's say a company wants to become a customer of a bank, but they're based in Russia, then at this moment there are sanctions. So can you enter or accept this customer that is located in Russia? Probably not, because you have the sanctions and you have to oblige by those sanction rules. So that's why you have to assess. So one is the geographical risk. The other one is the industry risk. So in which industry is the company active? If a company is active, let's say in weapons delivery, obviously that is for a lot of financial institutions a prohibited industry. So they don't want to deal with any company that are working on weapons. So then they can also refuse. So that's a big risk. Other risks can also be a customer risk, meaning that we don't know who is the owner of this company. So we need transparency. So after you assess the information, you have the part 3 where you make a risk score decision. And that risk score is in a lot of the financial institutions, low, medium, high, and unacceptable. And that's also based on the mitigating measures. What does that mean? Mitigating measures. So if you have a customer located in, let's say, a high risk country, You can perhaps mitigate the risk by saying that they don't deal with cash, or they are being monitored on a daily basis. So those are mitigating measures. Then you can negate the actual risk, and then you have the residual risk. And the part four is obviously after you have accepted the customer, you need to monitor the customer. So a lot of financial institutions have software in place that monitor the customer, screen the customer on a daily basis. So those are the main 4 points when you perform customer due diligence within the KYC process. These steps provide you a good overview of who the customer is at that moment with that information. You're dependent on information that's available to you. And this process is gained a lot of importance over the past years, because before, what happened was that these type of departments where you perform the KYC process, those were very administration work, but it has evolved into very risk assessment and risk-based approach thinking, where you have to really look into the business and try to prevent your company into entering a business relationship with somebody that's a high risk or unacceptable risk to your company.
Islamic finance learning made simple and memorable.